It's a huge week. Here to help us sort it all out, the investment pros. NewOak President James Frischling, he's back with us again. Speaking of which, Oliver Porsche, GMG, that would be sort of odd, counterintuitive for the average person to think all this great corporate news should be bad for the stock market, even if we're talking about the Fed. All right, Jim, so the next jobs report is a long way off. I don't know when the next Fed meeting is. Where do we get the impetus now? Where does the market get its spark from here?
Look, I thought today was a very important session because I actually expected there might be a little give back. I didn't expect it. I thought there might be met with some new short positions at these all-time highs. And in fact, I thought the market stayed the course. I know on the oil front, look, supply, demand, the fact is prices will move a lot faster than the supply and demand equation changes. So don't just write it off to supply. And on the Fed, that was a meaningful 10 minutes because it basically said you're going to have a relatively low rate environment, which means earnings are more important.
Right.
And again, the economy, which is doing better, more important to be focused on.
What did you make of the whole? Guess what I'm trying to say, though, Jim, is that there's not an irrational exuberance. Maybe there's a component to it here, but the entire rally, you can't put at the foot of irrational exuberance if, indeed, it's being led by strong companies paying healthy dividends that have been around for 100 years and will be around for another 100 years.
You've got the fight to quality. You've got a lot of foreign money coming to this country, and bigger is, I hate to say it this way, is better. More liquid, better covered. I'll also add the dividend story, which you just highlighted. It is a proxy. If you can't get the returns in the U.S. bond market, these companies have represented really a saving grace for savers. So that whole long-term buy position, you get the safety of these utilities, and you also get the dividend, which is, I think, the story. And they will continue because I do think rates are going to stay low. Even if the Fed moves, they're still going to be relatively low. The dividend payers are still a very.
You're a strong dollar guy, too, I think.
I am. I thought it could have been a headwind for some.
Or you're just afraid Steve Forbes is in a green room, and if you don't say the right thing, he's.
I'm definitely afraid of Steve Forbes. I will say that. No, I thought it could have been a headwind to these companies, but the fact is, if they deliver the goods that the consumers want, right. You still have to have a business model that works, and you got to bring the products.
Yeah, and again, I think unless it's long term, it's noise, which is why I kind of dismiss it when I'm doing my numbers. All right, look, a brilliant company, and they had a real competitor at one point. I think Adidas, and I think they've kind of beaten them into submission, if you will. What do you make of the knee-jerk reaction, though, Jim? This is when I got the tweets last night. I mean, I'm used to it. I've been doing this for a long time, but it does scare the average investor. And I always tell people, sometimes kidding, I say, you know what? Yeah, Nike may go out of business tomorrow. But I'm just kind of trying to be facetious to make a point.
No, they are a great company, and they are dominant in their space. They almost have a 30 times PE, though, and I know that spooks a few people. There's also this whole secondary market that Oliver was just talking about that also makes me sometimes feel fad. Now, I'm not going to bet against this fad, but when there's a secondary market, almost a sub-economy on these types of products. I've also learned that Target has it, and H&M have it in their specialty designer limited edition. You buy them, and they go on eBay. But when I see those things, I get worried that how much of this is for the company and how much is this kind of this secondary demand. So I think it can spook some people.
Yeah, but I would. Hey, now let's talk to the pros and see what they did. Jim, he picked Google as his robotics play back in September. It's been a little bit, it's pulled back a little bit, Jim.
No, I agree with that, but I still feel for the reason I picked it, they are going to be the dominant player because, again, I said bigger is better. If they see good ideas, they're going to be able to acquire it. They have the cash to do it. And again, they're not going away. Who's their biggest competitor?
Do they avoid the Amazon syndrome of, too focused on the top line, too unfocused, where we've got fingers and everything. It's almost like the impetuous child in a playground.
But they have to continue to innovate, and the way they're doing it is through acquisitions. So, again, I think it should be a core holding for anyone in this space.
How do you guys feel on Google?
We just added Google to our list this week, in fact. We love it.
We own it, and we're buying more.
I love it.
All right. There you go. I like it, too. I'm looking for a place to buy it a little bit
Roll
lower.
credits. I'm out.
See you later. But, Jim, I think Oliver alluded to it, okay? There's a Rasmussen poll out just today. It says 36% of consumers and 44% of investors think the economy is improving. That's huge. I mean, is it too much pessimism for consumers, or is it too much optimism for investors?
I mean, look, you have the wage gap right now. The wealth gap is at a 30-year high. So no matter how you do the hours or the hours or the wages, the fact is we have a 30-year gap. I do think people are starting to feel better about the economy, and you have I guess the highest earners, or rather let me phrase that, the wealthiest are tied to the stock market. Obviously, more than middle class who's tied to the housing market, and then we have the lower end, which is neither in housing and neither in the stock market, and they're feeling the pain right now. Wages aren't going up, and there's no benefit for them in the stock market or the housing market, and that's contributing to this huge gap we're seeing. Again, a 30-year high.
Just to clear it up, clarify it a little bit for the audience. Deleveraging, we're talking about, you guys wised up, right? You know, you really cut back big time on your credit card spending for years. Even though the government hasn't stopped on theirs, you stopped on yours. Now you are starting to spend. At least we're starting to see it in the data from the private sector and from government data.
I was going to add that 50% of meals are outside the house, and that hasn't changed since, I think, as early as '07. So with that kind of backdrop, you are going to see a good, this will be a good sector. However, it's very bifurcated. The big guys do well. The little guys are getting really hurt right now. So maybe part of the show is bigger might be better, because the big guys can pass these costs through across their chains. Small guys are in a very difficult shape. We talked on the show about the change in the lending standards and the reduction of a down payment to 3%, and people scream that there's a problem. You know who that's for? It's for first-time home buyers.
Right.
It's particularly for millennials. 53% of renters want to own a home. 77% of these renters believe it's a good investment, but they couldn't get there because of their student debt. They couldn't get there because of the down payment, and now that the standards are being reduced, I do think they're going to contribute.
Monica,
to the
I read this savings rate recently. Certain price level, large institutions can buy the stock, and I'm sure some may remember it was a high flyer at one point. You watch this one at all?
I mean, my only concern here is the space is so hot. Can a smaller player, I mean, on a relative basis, can they compete given the likes and given the competition that they're facing?
How are you guys feeling about the cloud?
I think it's absolutely going to be a growth sector. I feel bad continuing the theme of bigger is better. I do think it's the IBM, it's the Oracles, and actually we work with the Googles, the Microsoft, the Amazons, and specifically with Microsoft in this space, and it's helped our business tremendously.